What's up, everyone? Welcome back to NYU Grads Daily Podcast with Stocks and Finance. Just want to quickly cover a housekeeping item. Yesterday, the episode 16 file got corrupted and I couldn't really use it. So I'm actually going to make the decision early on to move over to Adobe Audition. So hopefully you'll notice a much better quality of audio production moving forward. And another piece of news is I've been kind of going back and forth whether I want to open up an account on Facebook or Meta's Thread, which I have done. What I'm going to be doing is posting the show notes and the podcast in its entirety on Substack. And you'll also obviously be able to listen to it on iTunes and Spotify. But I'm going to cut like 90-second previews and share those on Twitter as well as Thread moving forward. So just trying to maximize the audience and get a larger community base so that we can all start sharing ideas. And ultimately, what I want to do outside of the daily podcast is to invite you, the subscribers, and kind of have you talk your book or give your stock company recommendations and why you like those positions and those companies so that we can all learn from each other. So that's kind of just a little bit of housekeeping there. But let's just jump right in. It was a very busy day. I'm going to try to keep this under 15, but we may go a little over. So looking at breadth today, I think everything in the morning was a wash, right? Everyone in the world is basically waiting for the FOMC and Jerome Powell and the news of the rate hikes, which happened at 2 o'clock, but he spoke at 2:30 Eastern time. But I'll cover kind of macro level. The Dow finished up $82, which is 0.23%. The NASDAQ was down marginally at 0.12%. The S&P 500 was marginally down. It was basically flat. It was down 0.02%. And the Russell was up 0.72%. Things were kind of going back and forth flat all day until the end of the day. And I'll post a chart of like what happened at 2 o'clock with the NQ or NASDAQ and what happened after Jerome Powell finished speaking. You'll see like basically it spiked at 2:30 before he started talking, and then as soon as he finished, you lost the entire gain. And then during the close, we tried to bounce a little bit, but if you look at the session overall, there were 416 new highs and only 117 new lows. So that's more of a bullish slant. We had 60% of the shares advancing, 35% declining. And just kind of looking at different sectors in leadership, and I'll cover Meta in a bit in more deep dive, but Microsoft continued its sell-off from the earnings call. So Microsoft closed down negative 3.76%. I covered on the Lost podcast file from last night that Microsoft's earnings call had only 82 instances of AI or generative AI, whereas Google closed up today 5.59%, and on their earnings call, AI came up 91 times. So maybe if Microsoft just said AI, 10 to 20 more times, it'd be up right now. Amazon closed down 0.76%. Tesla closed down 0.35%. Apple finished marginally higher at 0.5%. When I take a look at some of the healthcare stocks that were really leading the past few sessions, where we were rotating from risk on to risk off, some of those shares were a little red, nothing crazy, right? Like Eli Lilly was down 0.8, Merck was down 0.36, UNH down 0.57, J&J basically closed flat at up 0.19. Some of the home builders like DR Horton, let's see, I'm just going to pull up their charts real quick so I can tell you how they closed. So if I go into the housing stocks and home builders, let's see, Beazer Homes, I'm just going to go down the list. They closed down basically 0.6%. DHI, which is DR Horton, closed down 1.8%. And keep in mind, this is all related to that quarter point interest rate increase. I think it's a knee-jerk reaction, but nothing's really changed with the home builders because they're still taking out of their margins and offering the 5.5% 30-year fixed for well-qualified buyers. If anything, a higher interest rate or 30-year interest rate helps them because they're really trying to lock out existing homeowners from selling their homes, and they're trapping them. ITB, the builder ETF, that was basically flat. Lennar Home Builders was down a quarter point. Pulte Homes was up 1%, continuing from the earnings. Toll Brothers, the luxury focused builder, down 0.67. XHB, another home builder index, that closed up 0.14. So it's really a nothing burger day for the builders. It's going to take a few days and a little bit more time to see what the impact is of this quarter point increase that happened today. One thing to note, this is now the 13th straight day that the Dow Jones have closed green. This is a record, by the way. However, there was that divergence where communication services kind of was leading, and tech, as I mentioned, a lot of the tech names were flat or red. They were falling, and small caps today outperformed large cap. We'll see what the trend will be once we open overnight and pre-market. But the news came out so late that we're going to have to wait for the next session to see more cards come out. So moving on to Jerome Powell, right? Before I get into his comments, because I watched some of it, I can't watch the whole thing. It just irritates me so much that the global financial markets is hinging on one man and one group's decisions and whims, and everyone in the room is asking, like children asking for candy. Hey, when are we going to get rate decreases? We need rate decreases. And he was dodging those questions of forecasting rates. But some things that stuck out was that Jerome said there's no recession forecasted by the Fed governors. He still believes, or the Fed still believes, people are still getting too many good jobs. The unemployment rate is still very low, so they feel like they can remain more hawkish or higher rates for longer. They keep mentioning that inflation is still too high, and they want to decrease their security holdings moving forward. So those are all hawkish statements, but there are parts of it where he was very dovish too, and he kept saying it will take time for what we have done, raising interest rates so quickly, to really impact inflation. So they're in that wait and see mode, looking for data dependency. But as I mentioned earlier, at 2:30 New York, he started talking. It spiked up across all indices, and as soon as 3 o'clock Eastern time hit, we lost the entire gain. And then going into the 4 p.m. close, they tried to rally a little bit of that lost move. Now, going into some earnings that happened after hours, some really big numbers coming out of Meta. I've not been the biggest fan, I'm going to be honest with you, of just Meta and Facebook in general, because I generally don't like advertising and being advertised to and having all my data stolen to third-party vendors that they work with. But hey, man, they released really good numbers. They beat revenue estimates by 3%. They beat guidance by 4%. They slightly beat on user growth estimates for Facebook and the what they call family of apps. The revenue beat across the board 3.8%, and ad impression growth. The estimates were 7% year-over-year growth, but they beat that, and they're now growing 34% for ad impressions year-over-year. So on the surface, very bullish. I've been playing around with Meta's Thread app, which was released like 2 weeks ago. Um, I think there's some things that will hopefully get improved. I think my biggest criticism is you can only search by users, not topics or hashtags. So an example would be if I'm looking for, um, I don't know, how to bake a cake. It's not going to produce results on a topic of how to bake a cake. It's going to only return back results of users that have like bake a cake, cake baking, that type of search result. Um, so I think that's a little bit challenging, right? So um, we'll see how the platform develops. I think the maximum length of video you can upload is 5 minutes, but that should probably work, right? It's a short form platform like Twitter. No one's going to watch a 20-minute video on Threads, so that's fine. I think it'll continue to grow, and the main reason I wanted to be on Threads is that I recognize that Threads and Twitter, while they may have some overlap of the same users on the platform, um, you're also going to have a big, diverse pool of potential audience and members on Threads that's not on Twitter, vice versa. And that's kind of why I made that decision to get more community members for NYU grad Substack. So another company that reported after hours was a kind of a big miss. CMG, which is Chipotle Mexican Grill, it is down $180 after hours. Obviously, it's a $2,000 stock. So percentage-wise, it's 8.69% down after hours. I don't remember the last time I've seen that for Chipotle. I have not heard the earnings release or earnings call, but I will probably check that out on Thursday and post something on Twitter and Threads. So watch out for that. And then another one that reported after the close was ServiceNow. ServiceNow was one of the highest flying SaaS names that was out there during the bull market before COVID. It hit a high of like $700. And right now it's sitting at 577. But after hours, they're down 3.34%. We'll see how they open that up tomorrow. So that is the summary of the day. I want to try to get all of the action for the session so that you don't have to follow it and you can kind of digest this in a snackable format on the podcast while you're heading into work or heading home from work or on your lunch break. You can listen to it at 1.5 times speed. But again, I want to thank everyone for subscribing. And if you haven't, please subscribe to the Substack. It's nyugrad.substack.com. You can find me on Twitter as well. The Twitter handle is nyugradSubstack, all one word. And on Threads, which just opened up this week, the user handle there is nyugrad.substack. And thank you again. And I will see you on the next podcast episode. Have a great day.